Jean-François Lambert is Global Head of Commodities and Structured Trade Finance at HSBC. He joins us today to discuss commodity prices, the role of China, and the rise of the renminbi. Jean-François, good morning and welcome.
Good morning, Nicolette.
Jean-François, the charts show that energy and metal prices are still on the rise. On the other hand, agricultural commodities prices have stabilized, rather on the low side, sort of 90s level, but food prices are still rising. What is the explanation for that?
Well, first of all, I mean, the graph you're mentioning are graphs which are deflated, i.e. they show a very long-term trend, and they are very different from what would show the current prices, the current level of prices in the commodities. Food has probably decorrelated from the agribusiness for the very simple reason that we have an emergence in the world of a very large middle class. By 2030, we believe that we will have probably 5 billion people living in the middle class. Middle class means more proteins, means a very different diet from people living in the rural areas before. And I believe that the added value required to produce the quality of the food which is required for that middle class is the explanation for that decorrelation.
Commodity prices and demand are clearly correlated with economic cycles. Now, the latest large cycle was the rise of China. Is that sort of super cycle going to subside, or is it going to be maintained?
I think that you're absolutely right, Nicolette. China represents probably is the most important market for commodities, and it's flooring the commodity prices. In other words, China represents 60% of the seaborne iron ore market, probably 44% of the copper. It's the number one consumer for soybean, for palm oil, for rubber. So it's a very, very significant market for that. So the key question is whether China can hold the fort or not hold the fort. And I think that the answer really is very straightforward. China is probably in the middle stage of its development from an urbanization perspective. The emergence of the middle class means there will be more needs for energy, more needs for infrastructure, and therefore metals, and there will be, of course, still more requirements about the food quality. So I think that rather than having worries about the development of China, I think we should be really comforted by the fact that we are now talking about the second economy in the world. The second largest economy in the world, growing at a pace of 7%. It's staggering. And even if many commentators contend that, oh, China may be slowing and that's maybe dangerous, well, I would prefer a 7% to 7.5% growth in China for the second largest economy in the world than a 10 to 12% growth for the 15th economy in the world.
And you're not concerned with the credit issue in China?
I am not concerned with the credit issue in China because most of the debt in China is domestic, and there is a lot of saving in China as much as lendings, and which mitigates significantly the lending side. I think that China will have to go and is going through a process of cleaning its financial system, and I think this is on the way, and which is, I think, a very good news. That will create hiccups. That will create some problem. I don't think that would derail the second largest economy on its path for growth and development.
Since last October, the renminbi has become the second most important currency for international trade, behind the dollar, of course, but ahead of the euro. What are your insights on this point?
I think that the development of the renminbi as a currency to settle trade is on the rise. Already, China is settling 18% of its trade in renminbi. If you compare that with 2-3 years ago, where we were probably barely around 6 to 8%, it's a very, very sharp increase. more importantly and fundamentally, how the second largest economy in the world could rely on an unconvertible currency. It is difficult, and we believe that China is now moving ahead much more aggressively in order to get to fully convertibility of the renminbi. And this, we contend, will happen within 2-3 years, which is very soon, in fact.
Very soon.
The minute we have a situation like this, I think that on the commodity side, which is my preferred topic, we will see something that is today rather unbelievable. We will see the Chinese paying their commodity purchase, their strategic commodity purchase, into renminbi. We will see that the whole strategy that they have been developing with the development of exchanges for commodities in Dalian, in Shanghai, with the purchase of the London Metal Exchange by the Hong Kong Stock Exchange, all this will suddenly make sense. Because, of course, China being one of the largest, if not the largest, commodity buyer in the world, they will have a say in front of the suppliers. Usually, commodity markets are a supplier's market. But when you have a very large buyer, they might dictate terms. And one of the terms that would dictate probably is the use of the commodities to quote some of these commodities in renminbi.
Jean-François, thank you very much for joining us today.
Thank you, Nicolette.